The following is a sample from Tax Savage's Basic Tax Preparation course.
Let's move on to some of the other income types that are reported on Form 1040. Gambling winnings is one most people don't think about. A taxpayer's gross gambling winnings are taxable, including money won from casino gambling, lotteries, races, and raffles. In some cases, gambling winnings will be reported to the taxpayer using IRS Form W-2J. Withholding of income tax in gambling winnings is required and will be shown on Form W-2J, while the taxes should be recorded on Form 1040. Gambling losses may not be netted out against winning. However, they may be deducted to the extent of any winnings reported. Itemized deductions on Schedule A are subject to 2% AGI adjustment, but we'll discuss itemized deductions in more detail in a future chapter. Prizes and awards are not considered gambling winnings and are not taxable if you were given the prize for outstanding achievement, if the taxpayer is selected without any action on this part, or the taxpayer has received the prize for a government unit or tax-exempt charitable organization. Certain employee achievement awards are excludable also, but prizes and awards for which no services were performed, such as cash or merchandise won in sweepstakes, contests, television game shows, and so on, are taxable and should be reported to the taxpayer by the organization that hosted it. But whether they're reported on Form 1099 or not, the taxpayer must show the income on his own Form 1040. Next to jury duty payments. People receive a payment for performing jury duty and must report it as taxable income on Form 1040. If his employer compensates him for the time taken for jury duty and the taxpayer takes paid time off to serve on the jury, then he is required to surrender his jury pay in exchange for his regular pay. He may deduct the amount he surrendered as an adjustment to his income. We touched briefly on the hobby income earlier, and we'll discuss it more here. Most income from a hobby is tactical, but it's sometimes debatable whether an activity is a business or a hobby. Usually, the determining factor is the taxpayer's intent. Certain taxpayers engage in hobbies for pleasure and businesses for profit. But sometimes, the IRS will rule that a business activity is a hobby if it didn't generate a profit in 3 out of the last 5 years. This is a regulation known as the Safe Harbor Rule. Hobby income should be reported on Form 1040 and expenses are deductible on Schedule A, subject to the 2% of AGI to the extent of the hobby income. Next is canceled debt. Remember way back in Lesson 1, we discussed that guy who was so tickled that the company who repoed his car had written off the debt and he didn't have to worry about it anymore? This is where we'll discuss some of the nitty-gritty about those situations. In some cases, a taxpayer will have debt canceled or forgiven. When this happens, it's generally considered income and it must be reported on Form 1040. Most of the time, the taxpayer will receive Form 1099-C, which is a cancellation of debt from the creditor. The kinds of canceled debt that are considered non-taxable include the following. Student loans after performance of work. This often happens as part of a program, frequently for teachers and nurses or doctors, where after they meet certain criteria, like working a certain number of years in a certain state, their loans are forgiven or partially forgiven. Debts that were canceled in a Chapter 11 bankruptcy, or because the taxpayer was ruled insolvent. Canceled debt that was considered to be a qualified farm indebtedness or qualified real property indebtedness. Debt cancellation intended as a gift, and any qualified mortgage interest on a primary residence. All of these are considered non-taxable debt cancellations by the IRS. Any exclusions to these are calculated and reported to the taxpayer on Form 982. If the canceled debt is related to a business or rental property, it must be reported as business or rental income on the appropriate form. On to a sort of weird one you won't often see. Alaska has what's called the Alaska Permanent Fund Dividend, where citizens in Alaska are eligible for distributions of dividends from the Alaska Permanent Fund. They're taxable, but not treated as dividends. Instead, they're reported as ordinary income on Form 1040. For obvious reasons, you're unlikely to see many of those unless you prepare taxes for an Alaskan resident. But hey, this is the 21st century, and with good advertising, you'll pull clients from all over the country, so it's possible. We're in the final stretch of a very hard lesson here. Thanks for sticking with it. Make sure you refer to your materials frequently, since this will help make sure you're keeping up. So you might remember that the definition of income for tax purposes is all revenue in the form of money, property, or insurances that have not been declared exempt from taxation.
This was a selected clip from our course on basic tax preparation training. For more clips like this one, subscribe to our channel or go to taxsavage.com, where you can see our professional tax preparation software that includes this entire course, a $396 value for free.